Airbnb, the American vacation rental online marketplace, has filed to go public. The company is based in San Francisco, California. Wall Street Journal reports that the company will be valued at $30 billion at the IPO. This is a huge comeback for the company that was valued at $18 billion earlier this year. The reason the valuation was so low because the bookings fell due to the pandemic. The company went into survival mode, raising cash and trying to cut costs in order to stay in business. In this video, we will go through the business of Airbnb and also look at the exceptional leadership demonstrated by the CEO during the pandemic to keep the company running. We will also look at the share structure and the key financial metrics of the company. We will evaluate the risk factors involved in investing in the IPO and try to come up with a share price evaluation at IPO. So please stay until the whole video to find out all the details about the Airbnb stock. Hi, this is Arshad Ahmed, founder of DIYstockpicker.com, an investment portal dedicated to help investors make intelligent decisions. This video is for information purposes and please do your due diligence before making any investment decisions. I have evaluated the DoorDash IPO and the Roblox IPO and you should find those videos on my channel. So please subscribe to my channel. I also have a lot of content lined up in future, so you won't miss any of those updates. Airbnb began in 2008 when two designers who had space to share hosted three travelers who were looking for a place to stay. Now millions of hosts and travelers choose to create a free Airbnb account and list their spaces and book unique accommodations on the platform. Airbnb experience hosts share their passions and interests with both travelers and locals. Airbnb is a global platform. It has hosts in more than 220 countries and 100,000 cities. The company has offices in 24 cities and it has 2,400 employees internationally. It has 4 million homes and 7.4 million listings of home rentals. CEO Brian Chesky has shown exceptional leadership during the pandemic. He rushed to raise cash and keep the business afloat. He also redesigned the app and website so that people can take a vacation from their crowded apartments in the urban communities to less crowded suburban homes. All the discretionary spending at the company was suspended. The full-time employee headcount was reduced by 25%. The company suspended all the facility build-outs and significantly reduced the capital expenditures. The executive team's salaries were reduced for 6 months. Here is a look at the share structure of the company. 284 million Class A shares with 1 vote per share. 250 million Class B shares with 20 votes per share. These shares are retained by the founder. 9.2 million shares of Class H stock, no voting rights. These are held in an endowment wholly owned by Airbnb. Here is a look at the key financial metrics. $2.8 billion of working capital and $4.5 billion cash on the balance sheet. Here is a look at the nights booked on the platform in millions. The nights and experiences booked had been increasing at a steady pace as more hosts and guests started to use the platform. In 2017, there were 185 million nights booked. In 2018, this increased to 250 million. And 2019, it increased to 326 million. In 2020, in the first 9 months, this fell to 146.9 million nights because of the pandemic. Gross booking value is a measure used by the company. This is the total amount of money generated on the platform before the payouts are made to the hosts. The gross booking value has been increasing steadily at a 45% growth rate until the pandemic hit. In 2017, $21 billion was generated. In 2018, $29 billion. And in 2019, this increased to $38 billion of gross booking value on the platform. In the first 9 months of 2020, this fell down to $18 billion. The revenue had been growing at a 35% rate pre-pandemic. It was $2.56 billion in 2017, $3.65 billion in 2018, and $4.8 billion in 2019. For the first 9 months of 2020, it fell down to $2.5 billion. If we look at the gross booking value and the revenue figure, we found out that the revenue is about 13% of the gross booking value. Here is a look at the free cash flow figures. Between the year 2017 and 2019, the cumulative free cash flow was close to $750 million. In 2020, it was negative $520 million, meaning the company burned $520 million of cash so far this year in 2020 due to the pandemic. Now let's take a look at the risk factors involved in investing in the Airbnb IPO. Let's take a look at the gross nights booked figure. In April 2020, due to the COVID-19 outbreak lockdowns, the gross nights booked dropped 72%. It fell down to 50% in May, and after May, starting in June, it stabilized and dropped 20% year over year. The fall in the gross nights booked ultimately falls down to the decrease in the gross booking value. So if you look at the gross booking value, it fell to 78% in April 2020 and 41% in May 2020. But something surprising is happening here. Starting in June all the way until September, it's just dropping 4% to 9%. And the reason for this is the percentage of the gross daily rate has increased 27% to 21%. The company is not profitable so far. The net losses keep getting larger and larger each year. The net loss in 2017 was $70 million. In 2018, it was $17 million. Whereas in 2019, it's $674 million of net loss. And so far in 2020, $696 million of net loss. The company has $2 billion of debt on its balance sheet. The guest safety is also a concern. There have been incidents of crime on the properties booked on the platform in the past. Cities may implement regulation, putting restrictions on short-term rentals. This will impact the Airbnb bookings. Now let's take a look at the Airbnb IPO stock price valuation. The company is expected to be valued at $30 billion at the IPO, and the company has about 542 million shares outstanding. So if we divide $30 billion market cap with 542 million shares, that gives $55 per share price at the IPO. The ballpark range may be between $50 to $60 per share at the IPO. I have evaluated the DoorDash IPO, and you should see that card here on the end screen. It's a very interesting valuation of the food delivery business, and I hope to see you in that video. Take care.